Hello everyone, welcome to week 4, that is sourcing strategy. During this week, we will study about sourcing strategy with objectives as follows. First, to understand the role of purchasing, procurement, and sourcing in supply chain and operation management. Procurement, responsibilities for selecting vendor, establishing payment terms, strategic vetting, selection, the negotiation of contract and actual purchasing of goods. While purchasing, on the other hand, is a subset of procurement. Purchasing generally refers simply to buying goods and or services. Purchasing often includes receiving and payment as well. Sourcing is an activity that consists in searching, comparing, and evaluating several potential partners in order to select the most suitable ones. Second objectives is to understand the basic elements of sourcing process, from determination of material requirements to supply management. The third objective is to identify the common issues in the outsourcing analysis to influence make or buy decision. Fourth, to identify common issues in organization in sourcing. Five, to apply appropriate sourcing strategies according to the number of suppliers, geographical supplier distribution and sourcing principles. And six, to analyze suppliers using spend analysis and supplier selection methods. Finally, we need also to know elements of supplier relationship management. Now let's go for a case study at Volkswagen. The case study distinguishes the new Volkswagen Production System or VPS and the new logistic concept or NLK at Volkswagen against Toyota Production System or TPS. In order to compete with Toyota that produce on average 30 vehicles per employee each year, Volkswagen is facing many challenges concerning productivity that Volkswagen produces on average at only 17, which is mainly influenced by production and logistics. In addition, other challenges are also identified, such as different production processes at globally distributed Volkswagen locations, demand variations, and missing flexibility in production and logistics. Larger stocks as a consequence of separated production and logistic planning, and also the continuous development of new technologies. So Volkswagen not only produce gas fueled vehicles but also hybrid and electrical vehicles, and it's more complex to manage. Now looking back to Toyota, its success is traced back to lean production. There are three pillars of lean production. First, just in time, meaning no stock in production and logistics. Kaizen, or continuous improvement, and Jidoka, avoiding errors through intelligent automation. Those are three pillars of lean production. While new Volkswagen Production System or VPS and the new logistic concept or NLK have to compete with a Toyota production system that adapt lean production, and therefore VPS have to improve production and logistic performance. Through the new VPS system, finally, Volkswagen cost per vehicle decreased by about €1,500. This should be achieved through the following. First, Volkswagen introduced new flexible assembly lines that can produce various models. For instance, the new Volkswagen plant in China can produce two different Golf models as well as two different Audi models on the same assembly line. That because of standardization of production processes. For instance, one painting procedure for all 90 plants instead of 90 different ones, as it is now the case in Volkswagen plant across the globe. Also reduction in the number of variations. Only 28 variations of air conditioning instead of 102, as it is now the case. In slide number 20 of this presentation, we will discuss more about what are the differences between old and this new logistic concept proposed by Volkswagen. Now let's back to basic definition of purchasing, procurement, and sourcing. There are a lot of definition of purchasing, procurement, and sourcing. One of them, according to Lyson and Farrington in 2012, purchasing is the process of procuring the proper requirement at the time needed for the lowest possible cost from a reliable source. Purchasing deals mostly with commercial activities and is related to transactional ordering processes, while procurement covers a broader scope than purchasing and covers both acquisition from third parties and from in-house providers. It also involves options appraisal and the critical make or buy decision. If we look at a figure of this slide, procurement is often confused with sourcing. Some of the activities that are involved in sourcing sometimes are intertwined with procurement. This is especially seen among small businesses. However, it is best to view both sourcing and procurement as two different activities, both of which have their own challenges, objectives, and key performance indicators. When comparing to sourcing, procurement is similar in that both involve the act of purchasing goods and services. The first step in sourcing a product or service involves assessing the need. From here, a sourcing plan is created and market research is conducted to identify potential suppliers. Next, a supplier is chosen. In some instances, more than one supplier will be needed. The procurement department is typically involved in the sourcing process. Procurement staff members make replenishment planning to create a budget, order products or services through the supplier, verify product or service details, and stay in contact with suppliers to ensure everyone is on the same page. These staff members are also responsible for maintaining receipts of all purchased goods and services that are outsourced. The receipts are sent to the accounting department to ensure accounts receivable and payable are kept up to date. Sourcing involves both procurement and purchasing, and therefore needs to be understood to be the entire set of business processes required to purchase goods and services. Generally, sourcing is an activity that will take place before procurement. There are numerous facets considered when sourcing tasks to suppliers, including to drawing contract about their price rates, delivery methods, and the time in which they can complete their services. Not only that, in a broader sense, sourcing includes drawing up contract, product design, and collaboration, and thus is about the process of establishing and managing the supplier relationship management. Sourcing is very important activity in the supply chain because the purchase part and materials can account for over 60% of the cost of finished goods. For retail companies within the supply chain, this can be as high as 90%. The quality of purchased materials, cost of goods bought, delivery of goods or service on time, supplier management, and supplier relationship are some of the factors that have a significant impact on supply chain performance and place particular demands on procurement managers. Now let's take a look at a figure of this current slide. The figure shows sourcing process that connects the supply side with the demand side. The figure depicts the high-level linkage between the requesting and the supplying side. The dashed line stands for information flows, and the solid lines for materials or products flows. Sourcing includes all activities from receiving order request, transmitting order to suppliers, drawing contract about their price rates, delivery methods, and the time in which they can complete their service, and to make the order available to the requester. In order to better understand the details behind this process, it is important to develop a clear understanding about the content and objectives of the sourcing activities, which include the following elements. First, determination of material requirements. For calculating the materials and components needed to manufacture a product, it consists of three primary steps: taking inventory of the materials and components on hand, identifying which additional ones are needed, and then scheduling their production or purchase. And therefore, some information needed, for instance, the type, composition, configuration, quality, volume, location, and timing for the delivery of the sourcing objects. Second is order management. Order management refers to the process of receiving, tracking, and fulfilling customers' orders. The order management process begins when an order is placed and ends when the customer receives their package. That involves determination of order volumes, frequencies, times, and specification of logistical condition, also the supervision of accurate deliveries, goods reception, invoice control, and approval. The next process is supplier-based research, observation, and analysis, and make or buy decision. Finally, supplier management. In supplier management, it is a process to ensure maximum value is received for the money that an organization pays to its suppliers. Because these supplies plays a part in the smooth running of an organization, it is important for both supplier and organization to engage properly and effectively. Now, make or buy decision versus outsourcing. Make or buy is a strategic decision that determines if the sourcing objects are internally made or externally sourced. Such strategic decisions might also be related to the question of core competence. For instance, if a core competence of a company is a product customization, the company might even have its own in-house suppliers, which are preparing certain modules or systems and present them to the assembly line once they are needed. This could be an exclusive steering wheel that a handmade for one car customer and which is presented to the assembly line. It could also be that propulsion components for the railway manufacturers are pre-assembled by in-house suppliers, or internal wing components pre-assembled for an aircraft producer. Otherwise, if in-house production is not possible, then a company can externalize certain processes. For instance, human resource management, facilities management, supply chain management, accounting, customer support, and service marketing. Computer aided design, research and development, content writing, engineering, diagnostic services, and legal documentations. There are many reasons to do outsourcing. For instance, in order to lower production costs, a manufacturing company may outsource its production process. For example, Apple outsources its iPhone assembly to Foxconn Technology Group, its biggest assembler. Another reason is better use of available resources. For focusing on core competencies, every business has limited resources, and every manager has limited time and attention. Outsourcing can help a company to shift its focus from peripheral activities toward works that serve the customer, and it can help managers set their priorities more clearly. For better use of available resources, hiring and training staff for short-term or peripheral projects can be very expensive, and temporary employees don't always live up to your expectation. Outsourcing lets a company focus its human resources where they need them most. For better cost structuring, companies that do everything themselves have much higher research, development, marketing, and distribution expenses, all of which must be passed on to customers. And outside providers, cost structure and economy of scale can give a firm an important competitive advantage. For reducing time to market, a good outsourcing firm has the resources to start a project right away. Handling the same project in-house might involve taking weeks and or months to hire the right people, train them, and provide the support they need. And if a project requires major capital investment, such as building a series of distribution centers, the startup process can be even more difficult. For reducing risk, every business investment carries a certain amount of risk. Market competition, government regulations, financial conditions, and technologies all change very quickly. Outsourcing providers assume and manage this risk for you, and they generally are much better at deciding how to avoid risk in their areas of expertise. Know-how sharing is a way of improving trust between buyer and supplier. First step is just production outsourcing, and then develop a deliberate knowledge sharing routine for integrating supplier knowledge and capabilities into their innovation efforts. This is called supplier involvement and integration in new product development. However, must be remembered that the outsourcing company needs a clear set of guidelines, expectations, and processes to manage the quality of products or services rendered. Therefore, under not normal situation where demand changes drastically due to a particular disruption, outsourcing company needs to assess supplier flexibility to deliver products or services. Finally, employing several outsourced for-profit enterprises can impact the taxes assessed on the outsourcing company. Now we go into make or buy analysis. There are several criteria in assessing make or buy decision. In each criteria, there are some questions to be used in outsourcing analysis. For instance, what are the unique capabilities that are very difficult to imitate? What are the strategic objectives the company needs to meet? Does the focus on lean production require an adaptation of the production depth? Is it necessary to buy more in new markets because of local content requirement? And then the second analysis about variety and or stability of the demand side. What is the stable level of demand we can fulfill with our existing capacity, and when is it recommended to increase peak capacity needs by temporary supplementary external sourcing? The next analysis includes production capacity on the sourcing side. Are there existing contracts, for instance purchasing agreements or sales orders, that need to be fulfilled and which will impact the make or buy decision? The next analysis including autonomy. Do we jeopardize our competitive position by providing external parties which with confidential drawings, intellectual property rights, new research results, etc.? Is there a risk that we might even create a future competitor by going for a buy decision that will lead to a know-how transfer? And this is all about trust. The next analysis is about dependency on supplier. With the increasing level of external purchases, dependency on a supplier, their quality, reliability, and also punctuality can significantly influence the organization's own reputation. And we have a question. Do we have a strong or weak market position? And how does it look in the case of suppliers? Sometimes the suppliers and also can compete with us at future. And the next analysis include evaluation of the cost structure. In the case of make decision, the corresponding costs are linked to, for instance, material and labor costs, salary, or the depreciation cost of the equipment in use. In the case of buy, the decision will be related to the purchasing, transportation, handling, storage, and transportation costs. And finally, the last analysis include financial shortage or need for capital, especially for times of financial shortages. The decision to externally source parts, module, or services is an important factor as it relieves the cost pressure. Now we go into sourcing strategies can be classified according to three basic features. Number of suppliers can be single, dual, or multiple sourcing. According to geographical supplier distributions, local, national, international, and global sourcing. Or sourcing principles, sourcing on stock, just in time, or particular sourcing. In this area, the task is to manage the supplier base with the objective of determining the right number of suppliers. By reducing the supplier base, larger volumes can be ordered from just one supplier or single sourcing strategy, with the objective of generating volume bundling or scale effects. However, there might be a danger that dependence on just one supplier is considered to be a too high risk. In terms of geographical aspect, we recognize local sourcing, national sourcing, international sourcing, global sourcing. International sourcing, mostly between two neighboring countries, for instance, between UK and Republic of Ireland, between Denmark and Germany, and even also maybe between Denmark and Norway. While global sourcing is something like global trade, for instance, from Asia to Europe or vice versa. In terms of sourcing principles, they are sourcing to stock, just-in-time sourcing, and supply chain coordination, for instance, VMI, and particular sourcing. Examples of particular sourcings are crowdsourcing, as a process in which an organization chooses to outsource tasks that traditionally were performed internally to a crowd or individuals external to the organization. Alternatively, solution sourcing is a sourcing approach where a number of external and independent service providers solicit a solution for a client organization. Again, other type of particular sourcing is co-sourcing, characterizes a long-term one-to-one business relationship where both parties have mutually vested interest in the collaboration's outcome. In practice, co-sourcing refers to a partnership in which the asset manager and the service providers create work groups and processes providing customized support across various business functions.